S&P breaks 4,400 and is sitting on a critical level. Nasdaq formally makes its first lower low of 2023. Semiconductors continue to drop after hours, despite AMAT's excellent report on earnings and guidance. Apple formally cracks. We'll explain what to watch for next. Follow up on Hawaiian Electric. Bank America downgrades it to $10. We'll tell you the next steps. NVIDIA remains resilient ahead of earnings. What do CrowdStrike, ONON Holdings, and Symbotic all have in common? SMCI breaks its H pattern. Tesla teetering on major support. We'll tell you what to watch for tomorrow. Walmart with raised guidance and an earnings beat, but closes at the low of the day. Bitcoin down 9% after hours. ROST stores up 6%. We have a ton to go over. Let's get to it. Hey everybody, welcome back. You can see where we closed today, below that 4,400. This is pretty much the exact worst case scenario on the day. At the time of filming this little wick right here is the new market that opens up at 6 p.m. Eastern Standard Time. You can see it right there and see how we're teetering on this level. I just want to discuss this for a moment. You can kind of see these lower highs over and over again. Every once in a while, interim would step up and kind of set you back a little way. But really all that was doing was just forming a little consolidation in here, and we can kind of see that pretty clearly. But what was happening up here is breaking out of that. We should be able to get this. And I'll just drop that down so we can kind of get a much clearer picture on that. You can see that level right there. 43.27 is your next level you really want to pay attention to. It's really the low of that wick, and then it's also the high over here. I love when that works. But you can see that 43.27. To be candid, I don't see any reason why you're not going to touch it. You have zero support. You have zero leadership. Even the leaders that should be running are no longer running, and they're pulling money out of that. We're going to get to that. I'm going to be very specific so you can see it for yourself. I'm going to give you specific patterns to watch tomorrow that have been very lucrative for us in the community, but anybody can notify these if you know what to look for. So I'll point them out today, and we'll go from there. Now, we want to watch this level tomorrow very carefully, because if you break 43.2750, and people will say, oh, you couldn't possibly do that tomorrow. You most certainly could do that tomorrow. It is not that big of a stretch to assume that you go from here down to here. It's 1%. If you noticed what's starting to happen with the sell-offs, and I don't know if you're noticing this or not, but it's much more prevalent on the Nasdaq, these small red bars down consolidate, long red bar, long red bar, long red bar. If you are a candlestick person, you know this as three black crows. Lower low, lower low, lower low, full candles, all closing at the lows. It's pretty much as bearish as you can get. From a candlestick pattern, usually you see some kind of relief or bounce. Tomorrow's option X. They've been playing a lot of games with the option people lately. You'll note that even if you're dropping, it's much harder to make money. It's one of the reasons why we've kind of switched our strategy a little bit, but we're still doing options. Depends on the trade. Let's put in some moving averages. We have a 1222 cross. We've been talking about this now for 2 weeks. As you guys that don't know, that if you're new, we start on Saturday and we run through the week with what we do on Saturday. We've been talking about this for Saturdays, past 2 weeks. But this possibility of a cross that led to an actual 1222 cross. I use a 12, I use a 22, and I use a 55. You should use what you want to use. I was going to ask if it's an EMA or an SMA. I use SMA on charts. EMAs front load the data. I don't want to front load my data on a daily chart. If you want to do that, that's great. And I strongly suggest you do it. It makes you comfortable and what works. So you can see where that 55 is. You could easily bounce to that level, but it's just not happening. And then we start talking about up here where we have to get the 45.60 before you're even over the 22. And I assign little numerical values to these, and then I put little catchphrases with them so I understand what they mean. If I'm below the 12, that means that swing trades are busted for that period of time. If I'm below the 22, that is my demarcation line. It means bull and bears are in charge. If you are above, it means that the bulls are in charge. If you are below, it means the bears are in charge. It's just how I view the world. I find demarcation lines extremely helpful to just quantify large amounts of information over a very short period of time. And so then here you have the 55, and that's institutional support. And guess what we lost? Institutional support. Did we even retest institutional support? No, we just went through it like butter. And we're going to talk about some things that we should really be aware of. But I'd like to just go over this very quickly. Now, this is the hourly chart, and we can see that head and shoulders going straight across. We've been going over this head and shoulders and the development of it since the end of July. And I think it's very important to just follow up on these developments. Left shoulder, head, right shoulder, right? It helps us drill it in. Neckline test, neckline, neckline test. Test retest and failure. That's what you like. You don't ever really want to do the first break. You want to do the retest and the roll. It's the retest and the roll where you can make the money, because usually they'll undercut, look for supply, and then rip you. But usually if you make that lower low, you know which way you're going. So that's what happened right here. You can see that pretty clearly. Now, you have a test right here, 45.61. That's the level. That's your major resistance right now. You just see lower low, lower high, lower high, lower low, lower low. I'm spending time on this on purpose. There is a very specific pattern that's going on here. They are constantly selling in a very orderly way, and they've been doing this way for weeks. And then what they are doing, what happens? Tries to get through, can't, flips. Support becomes what? Resistance. Happens on trend lines too. So you really want to focus on that. That's definitely something that's very important. I would focus on these levels that you're looking at here. I would most certainly be watching this level right here very, very closely. And I'm just going to drop a pin right there so you can see where it is. So you're right around that 44.40. We had it at 44.35, I think, today. You're right around there. So I would watch that, and these are your next support levels. But I mean, anyone can see this. You can see the slope. You can see exactly what's happening here. And it's not, I mean, it's definitely not pretty, and you should be able to kind of get that sense of this. It's just not really what you'd want to see. So it is what it is, and we don't have any leadership. Speaking of that, let's get into the Nasdaq. You know, when they goes up, it takes the stairs. On the way down, it takes the window. I don't really view this as, you know, this head and shoulders. I think it's too wonky. It's more of a, if you kind of come here and look at it from this perspective, your line right here, you kind of see your break, the retest, failure. You might be able to clone these and see if they fit somewhere. I haven't done this yet. Let's see what's going on there. So there you clone. You always want to clone, find the trajectory. So that kind of tells you what happens. Rising wedge. Boom, when you break a rising wedge, here's your retest, right? You don't ever really want to do this. The money's made on the retest. And you can see that neckline right there on the Nasdaq too. I mean, you all say it, and then you try to get through it, can't, rejection. And all they did was just walk you down. Now there's minor levels here, in here. Every single one of these levels has another level associated with it for those that are just doing their day trades. So what you would do is you would just extrapolate this out. I'm using an hourly chart. You can see it right here from the 60 minutes I have up there. But you would just extrapolate this out and do this on a 5-minute, and you'll see these little mini down wedges in this big wedge. The thing that should be concerning going in for tomorrow, if you're long, I'm not long, I've been net short. You can go back and listen to the weeks and weeks of videos here. So you see that right there? See how you're finally breaking the big wedge? So then once again, what you like to do is go right here and just clone this. There's a reason why there's a button there, guys. You just kind of drop it in, see where you sit. So you could say you're there. A couple other points up here. I'd be leaning towards that would be the top of the channel, because I have too many of these up here now. So if you're kind of looking at that area, you might bounce to that 15.1, 15.2, and we should be really familiar with that area. But once you broke that channel, and you broke our 14.85, we went through these levels pre-market live today in the public video at 8:30. So try to attend that. See that break of that neckline? So what you do now is you look at that, and you're going to tell me you don't care if you call it a rising wedge, you don't care if you broke a trend line, I don't care if you call it a banana. Bottom line is you've broken so many different ways that you just can't even count them. But what you want to do is you want to mark it off. What do I mean by that? You want to just kind of go here and go, what is the percentage to that neckline? Because I think we'd all agree one way or another, breaking that is a first real lower low. You could argue here, but could you? Because you didn't really hit the high yet. You didn't hit a new high here, right? So could you use that? Not really. So the real first higher high is you make a higher high here, here's your lower low, and you undercut right here. Some could make this argument, and I'm not telling you not to, but it's dead money here anyway. Here's the next move. Your measured move from this area is the peak to the neckline, 7%. So this is telling you that you could have a 7% correction from here. That's just technically speaking. That has nothing to do with what's going on with Japan, what they're doing, and what's going on with China as Evergrande, I believe is the correct pronunciation of that. Everyone knows if you're new to this channel that my pronunciation skills leave something to be desired, but hopefully you're not following me that for pronunciation and punctuation. So then you could just see to the next level, where do you really have support? And I really want to hammer this home. It's why I'm spending time on the indexes. Do you have anything there? Try not to laugh. Do you have anything there that would remotely tell you that you're going to be just fine? And the answer is no. No, you don't. There's nothing there that's telling you that you're not dropping another 3.5% to 4%. Now, could you catch tomorrow in economic data? Could someone come out and say something in the market rally? Yes. My thought process is I don't see what that's going to be. So if we clean all this off, you might want to screenshot this for tomorrow for those that trade the NQ or just overlay it with the Qs. That's a double top. We talked about the double top. It's funny, and I do appreciate all your comments. Guys, I'm not bullish or bearish. If you've been following me for the year and a half I've been doing this, and we've had the channel for a little bit longer, but we really started hammering this home about a year and a half ago. I trade what's in front of me. I'm a trader. I trade. And I've been doing it for over 2 decades. So I trade what the market's telling me is going to happen. I don't tell the market what it's going to do. And I just read and I analyze, and that's what I do. It's very different. It's actually much healthier, and you don't tie your ego to it. So you can see your top levels up here and how you're doing, and you know where your top is. You don't really need me for that. The value that I'm going to add here is just explaining to you that this level right here, and now you see what I mean when I say you broke your first lower low, and we can blow that up real nice, and you can see right in there what's happening. So you can also see that trend line that you broke. The count is to the low of the trend line. I don't know if that's really going to happen or not. There's some argument out there that we have some real issues. I'm not going to dive into it. I'm going to get into it on Saturday, so make sure you subscribe to the channel. Please keep sharing these videos. The amount of emails that I get saying, hey, I follow a buddy of mine. He shared and retweeted your video. I just want to thank you. You saved me X. Probably because they got out of something, usually is what happens. It's not the idea that makes them money. It's usually the pain that I save them. Seems to be the majority of emails, which is actually the whole purpose. If you don't lose money, you don't need to make much, right? So anyway, you can see your levels right here, and you can see how you're acting. You might just want to pay attention to those tomorrow and see how they do. Overlay the basics. You have a 1222 cross. You can't miss it, guys. I mean, you really can't miss that. Let me click on that. Get that going right here. 1222. Oops, I'll get there. 1222. Okay, 22 is pointing down. And I said about 5 days ago that you're setting up a 1255. And there's your 1255 cross. Okay, this is ugly. We talk about this. You broke the RSI on the 50. People say that this is a lagging indicator. I would say that they just don't know how to read it properly. Tools depend on the person that is wielding them. Give me a hammer. I can barely hold a picture up. Someone else can build a house. So here you are, and you're undercutting that 30. You're getting into oversold territory. What does that mean? It means you can bounce. That means that there could be a bounce out there. I don't see it yet. Now maybe on option X they're going to try and do it to us, but I just don't see it yet. I mean, I don't know what's going to hold here, guys. If you take a look at the stocks and what's going on here, and again, I don't really want to reiterate a lot of the stuff we've gone over, but I think we should hammer this home because it's getting worse. It's not getting better. I'm sure you all see that. It's getting worse. Now you have a 1222 cross. You have a 1255 cross. You're taking out lows in the market. You've broken that trend line. And we've talked about this before. If you have these types of trend lines in, you go to the low of that trend line. So I'm going to come straight across here because I don't really have a close below that line. And wicks are what? Price rejection, and we reject it in there. And then I would just click on that, and what would we do? We'd clone that button and just see if it fits in there, and there it is. It's a Christmas miracle. So then what you would do is you would just kind of go here and say, okay, well, where's the low end of that channel? Well, you could say the low end's here, or you could argue that I should have gone further and I should have gone to here. So where does that put you? Put you around that 460 level. So I think that's probably where we're heading, right around that 466 level. I think that is the first spot that you have a shot at stopping at. You're going through the rest of this stuff like butter. I mean, you're not even paying attention to it. You're not stopping. Like, you're not even seeing anything. It literally is like a hot knife through butter. I mean, it's crazy how fast it's going. But this is what happens, right? You take the stairs up, you take the window down. This is important, but let's talk about lack of leadership. Apple, since phone sales, we're up in options, we're up short. We're long a bear ETF. I'm not going to get into it all. We've been talking about it for a while. You're down $10. I mean, this is the thing. If you catch these moves early, you don't have to do anything. I've done very little with this trade except add to it. I added to the puts today when it gave me a confirmation break. But very rarely am I even looking at this chart on like a 5-minute basis. I'm not even doing that. The daily is just so easy to read. We talked about this a couple days ago. This is an extremely important point that you might want to watch this part I'm about to explain, just so you can do it yourself. And we'll do here for time's sake. So here is a point of interest. Everyone can see this point of interest, and you can click back here and get my cool arrows. All right, so here's your point of interest right here. You can see you tried to get there before, couldn't, but you did here, didn't you? What happens here? It starts to trend in that area. So why does it start trending in here? Why are we having issues here? Well, because you have supply here. What is this doing? It's eating up what? It's eating up the supply, because when that supply is gone, what's going to happen? We're going to go higher. Okay, I have demand on the way down. I have demand. I have buyers here. I have people that want to buy at a major support level. What are they doing? They're buying at that support level. They're eating up demand. Here you're eating up supply. You might want to watch this again. You're eating up supply here. You're eating up demand here on the way down. I want to buy it. I'm support. I said I was going to buy it when it pulled back. It's going to go sideways, and then he's going to come out with a new iPhone, and everyone's going to want it. Okay, then we break. This is day one of the break. All right. So if you remember that, you can go through other charts that are on their way down, that are below the 55, that are sitting on major support. And if you see them doing this, forming these somewhat bear pendants, once they break, that's it. It's game over. No technician is looking at that chart and saying, you know what I need to do? I need to buy that. No investment advisor is rushing in to buy this. They missed iPhone sales. That's it. It's over. You look at the RSI and it can't rally. Stick with the pattern that's developing. Don't go and try and reinvent the wheel. Now, I'm going to be real clear here. I am still short Apple. I have no idea how bad this gets. I have no idea how bad it gets with Evergrande. I don't know U.S. banking exposure to Evergrande that claimed bankruptcy tonight. Well, I'll start connecting all the dots tomorrow. There are signs that are concerning. Apple's not really even one of them. AMAT is concerning, even though it's up about $3 after hour. Why? I was actually short this and covered it before the earnings call just because it didn't drop enough and the puts weren't acting right. So I did okay with the trade. If you've been following me, you know that I've been short that, but why are we having good earnings, really good earnings, and why are we going down? We raised guidance, we had really good earnings, and now what? We raised guidance, we had really good earnings, and now what? We're hardly up. We're up a couple bucks. Now you have to watch this, but this is not what I want to see. This to me looks like we're heading to that 55 and they're just going to sell it and dump it on us tomorrow. So I need to watch this, and I have some signs that that's what's going to happen because we've been seeing that happen. We saw that happen with this NVTS, which had a great quarter. Absolutely great quarter. 28%, 9% on revenue. And what did they do? They dumped it. They dumped the living heck out of it. When they start selling stocks that are doing well on good news, you're rocking on good news, you should be going up. And instead, they're just rocking us and they're just taking us down. You need to pay attention to this. This is as clear of a sign. I'm going to give you another sign you have to pay attention to. But this is as clear of an indication as you're going to get that something's wrong and they want out. I did a study this weekend and I didn't have time to get into it in the Saturday video, but the discretionary accounts, the people that can move, the institutions that can move, they're getting out. If you're in the community, you remember I talked about this in our Sunday meeting, like the discretionary people, they're getting out of their positions. They're not buying here. This stuff is charted extensively. And when you start to see that, that's what they're doing. They're waiting for the news. They're getting the pop. They're getting the best price they can when they have supply, and they're getting out. Why are they waiting for earnings? Why are they waiting for good earnings to get out? Because they know they're going to have the volume that they can get out. That's why they're waiting. Now, what else? Where else did we see this? Saw it in Walmart today. Crystal clear. Great quarter. Raises guidance. Look at that move, 61 to 55. You're sitting on the 55. You crack that 55 tomorrow, every institution that's in there that wants out is going to panic. Every single one. I mean, you can literally set a watch to it, put an alert on it. Just watch it tomorrow. Watch what happens. Not that you have to short it, but just watch what happens. There's no way there's no way it's going to hold. Target's still one that I'm short and very little interest in doing anything with it. You see my 700 levels there. And you can see right here the 55, the 22, and 12. Which one did you close above today? How about none? How about none of them? What's going to happen when this bar that couldn't even hold here and get above 50% comes in tomorrow and you undercut that open? If you undercut that open, you've got nothing but air down here. Nothing but air. So keep that in mind. There's a bunch of names to go over. I really want to hammer that home, and there's two things that you really have to know before tomorrow. But before I get to those, let's just do a little cleanup and follow up. We talked about shorting this in the pre-market, actually in the public one we were going over it. A bunch of guys were talking about it. We did this one in the community, 19. I closed it this morning, very simply, a gap down, $10 target price. The people that owned it for the ex-dividend, and you're here. And now that dividend it went X today, so you're going to see some movement there. I'm not saying this is over, but this is PCG all over again. They're going to go through bankruptcies, restructurings, all kinds of things. This is going to take time, but when you're trading, you just set very key levels, and I'll show you exactly what I did and how I did it so that you could do it yourself. So Obviously, this level that's here was not there at that time, but we gapped down, and all I did was just wait to watch what was going to happen on that first 1 minute bar. The moment we upticked on that first 1 minute bar, I had the 20s, the 15s, and the 10 puts, and I was short stock. We closed right here, closed half. Waited to see if we were going to get over this wick, and when we did, we got over it there, closed the rest, closed the entire trade. And this was a trade we were building and scaling and adding since 19. And then that's it, trade's over. Do I think it's going lower? Yeah, I think this could be a zero. But there could also be a sum of parts where they do some kind of restructuring and one day it goes to 17. I don't want to lose all that profit, so I have to manage the trade. Do not sleep on this, but what I would suggest is maybe wait for some kind of rally and then get involved with it. We should talk about NVIDIA here in a little detail, and I just want to point this out. You have earnings next week. A lot of these names, they are not holding. The upgrades on this stock ahead of this quarter, this better be the best quarter, and it just better be an amazing quarter, because they are just building this up with $800 target prices in 12 months. I mean, it's $1 trillion you're talking about adding to the company. $1 trillion. It's not SMCI. You know, you're up 200% from quarter over quarter, and people are wondering why it's down. I mean, this is a massive, massive company. And does it go down tomorrow because China's losing its second biggest commercial real estate developer? I mean, 40% of their sales are China, I think. Is that going to be a problem? I don't know. I really don't know. The one thing I will say is this that I think is fascinating about this trade. I've got this little pendant that I'm building, and I'm really not breaking from that bar. Like usually if you have a breakout bar like this, and then I want to go through the rest of these. If you have a breakout bar like that, and then you click on these settings, and I'm going to get rid of everything but the 50% because it's not a fib level, but just, I always look at those bars and go, okay, as long as I'm not below 50%, I'm okay. I can't even get to 50%. I can't even get there. So that's pretty telling. I'd watch that level tomorrow and see if you can get to that 420 or not, but I'm absolutely shocked that this is what you're dealing with. I'm absolutely shocked that this is what you're dealing with, that you can't even break with the way the market's cracking, the way that the stocks is cracking. It's very impressive. It really is. So, you know, if you're looking to play something on a bounce, if you gap down tomorrow, this is probably it, the way it's acting. I mean, it's just been exceptionally strong. But I do want to talk about a couple names here and something else that I am noticing. And I do want to go through Tesla as well. You know, Tesla, their exposure to China, the price cuts, look, pardon me, this is just getting started in my opinion. You broke very clearly here. There is nothing here, nothing. I have puts out there, I am short this, just FYI. But there's nothing there. You break that and this can just keep dropping and dropping and dropping. There's nothing to this. You know, even in here, you don't really have much. You have these little spots, 208, but there's really very little in here that I see that you're going to hold. So I see nothing but straight selling since earnings. Why? Because they were waiting to sell, waiting for the volume. They got the volume and they sold. Hopefully you're starting to see that pattern. So you know, UPST, I mean, which I didn't think that was that dangerous, but apparently it was. I have a short on. We're sitting with it. I find this troubling, the Walmart. I want to reiterate that before we get into the next situation. I find this troubling. Wolf coming down and saying that earnings were going to have to be lower than expected. They're still in the semiconductor space. They're no AMAT, but they're still there. We need to be aware of that. Bitcoin's cracking. Bitcoin is definitely something that I use as a bellwether to the Nasdaq and for risk, because this is what people trade for risk. Now it's floating out there that Musk sold 400 million of stock, or Bitcoin rather, and that's why it's down. If that's what $400 million does to Bitcoin and drops it 10%, that tells you how illiquid this thing really is. Quite frankly, that's very illiquid if something like that is going to do it. So that's not ideal. Whether it's him or it's not him or whatever it is, I just think we should be aware of that. We should talk about ROST stores. I would look at getting out of those, you know, shorting some of those names on rallies tomorrow. ROST stores crushed. You need to see if this is going to stay up tomorrow. They crushed, had a great quarter. So did AMAT. You have to see if they're going to stay up tomorrow. It's really important. I want to talk about something else that we're seeing out there. It was a telltale sign. I went over it on Saturday, but I want you guys to watch this tomorrow with your trades. If you spike over a key level, like I spiked over here, and I bought this, and then I got stopped out right here, that's a tell. Okay? I shouldn't be getting stopped out the same day on something like that. And then you have to go through your other trades and take a look at them. Crowd was something yesterday we were talking about. And we looked at this and said, what's going on here? Out of nowhere, we're encapsulating this bar. We're trying to make this higher high. We're pushing. They're buying crowd. They got people in crowd yesterday. What they do today? They dumped it. So this is the kind of stuff that you have to watch. When you start seeing these kinds of patterns over and over again, what they do here on ONON. 2 double wicks, and then we take you over the wick. Oh, so it's definitely going to go higher. We're going to gap fill. What happens? Walks it back down. They used that trigger to get supply so they could dump stock, or get demand so they could dump stock rather. So when you think about it that way, that's the kind of stuff that you need to be looking for. Be very careful tomorrow. X is just baffling. This should be a lot higher when you have 3 different bidders out there. Maybe they're worried about the union and being able to get this deal done with the union. I'm not sure, but when you have a $35 cash offer as a backstop, your stock should be a little higher than this. That's it.